Hello, YouTube. All right, some of you have expressed an interest in learning about tax deed sales, which is how I acquired my house. Basically, cheaper than what it would cost to buy it, through traditional routes. And I thought I'd spend a few minutes on this video to explain to you the process for those of you who may be interested in it, and also give you some warnings based on what I learned in the process. For those of you who don't know, basically tax deed sales are sales that are initiated by the government, by the county or whatever, the people who collect taxes for the property that your property sits on. And what happens is if you can't pay the taxes on your property, your property taxes, after a while, the county puts up these things called tax certificates, and they allow investors to buy up those tax certificates and pay your taxes for you. And then what happens is, when I say for you, for the person who owns the house. And what happens is you're given a certain number of years to redeem those certificates, to give them, the investors back their money plus interest. And if you don't do it within that time frame, the county can sell your house. And what they do is they sell it for whatever you owe in taxes, plus any liens that people have filed on your property, like the bank lien, any lien from anybody who you owe money to that has put a lien on your property. So what they do is they put that out, and that's how much they want to get for the property, at least. So let's say you owed $6,000 in taxes. They're gonna want at least $6,000 for the property. That way they can get all the money for the county, pay for the taxes, plus anyone who has a lien on it. Now, what they do is every month, at least here in Florida, and it varies in different counties and different states how often they do it, but I think it's at least once a month. Some states may not have it that often. It just depends on how many properties are available for a tax deed sale. So if a person doesn't redeem their certificate, doesn't pay off the people who paid for them, then the county initiates a tax sale that will sell the ownership, the title of the house, to whoever bids on it. And then what happens with the money, supposed to happen, is the money that's generated from the auction that they have is given to each of the lien holders, including the county and the banks, or whoever owns a lien and has a lien against the property. And then anything left over, they give back to the owners, if they can track them down. So how properties generally fall into a tax lien is that the people just stop paying taxes on it. And this can happen in several ways. People just don't care and they just let the property go. They just abandon it. Basically, it's an abandoned property. Or maybe the people have died and no family wants to claim it and pay the taxes on it. So the whole process probably takes about 5 to 6 years of them not paying taxes. And then the people who buy the tax lien, when the certificate is due, when it has to be paid off and it's not paid off, whoever has this tax certificates can initiate the auction to get their money. They'll get their investment plus interest, and that's how that works. Now, in my case, I bid on a house through the county. And if you're wanting to know how to do it yourself, it's not as complicated as it seems. I know I spent probably 30 years before I did it, even though I knew about it 30 years ago. I was first introduced to the concept when I was working as a computer programmer in Orlando, and one of the accountants was telling me, I should join a pool. They were all collecting money to buy tax properties, tax deeds, tax deed properties. And accountants tend to know this kind of stuff because they know how to make money. They know all about money. So, but I passed up on it. And then I heard about it from one of my coworkers when I was working as a teacher in Orlando. She and her husband bought a house. I think they paid on a tax deed auction. I think they paid $40,000 for it at the time. But the house was worth, like, at that time, I think $250,000. So they got a house for $40,000 that was worth $250,000. But that was probably about 30 years ago. So let's fast forward to now. So basically, the properties you're going to find that are in these things, it's just, some of them can be nice, some of them can be crap, like the one I bought. Okay, most of them I think are going to be crap because a lot of times taxes, they can be kind of expensive, but not super expensive. We're talking like some of them are only a couple hundred a year. So, you know, the whole thing might be like $3,000 owed, and you could lose your house over that. But those would be houses like that are, you know, really junky and broken and not worth a lot. But sometimes you get a house that could be worth like $500,000 or more. And then those, they might owe like as much as $40,000 or $50,000 in taxes. So it depends. But the key to it is knowing that even though that's how much taxes was owed on it, how much the county wants, that's not what they sell for. Now, in the old days, before a lot of people knew about tax deed sales, tax deed auctions, you could pick up a house for like $2,000, you know, because people would owe about $2,000 and they'd be dead, and, you know, nobody wanted the house, or they didn't have any family that were aware of it. And then the house would go up for auction, and not that many people knew about it, so you could bid like $2,000 and win a house, a real house, free and clear. So that's not true anymore, sadly. So if you want to get in on this, the first thing you want to do is contact your county property tax office and ask them about tax, if they conduct tax deed sales and how you participate in it. A lot of them will refer you to a website. Florida, as well as several other states, including Colorado, New Jersey, and a few others, they use a website called realauctions.com. I think it's realauctions.com. I'll try to look up the auction site and provide a link on this video when it airs, so you guys can look it up if you want to. But the first people you want to contact is your local government who collects the property taxes, and ask them, hey, you guys, you know, who do you need to talk to about tax deed auctions for, you know, properties that owe taxes, back taxes? And they will point you to their website, and then it'll have a link to the auction site if that's how they do it online. A lot of them are doing it online now. They used to sometimes have, you know, in the old days, have people get together and actually do a real auction. But I think nowadays most of them do it online. So once you get that website, you have to register with the site, and to do that, you submit to them your information, you know, your name, your social security number, and all this other stuff. And then you have to deposit money into the account. Now, they don't require you to deposit the full amount. The amount they require you to deposit is usually, I think, about 20% of what the total amount you're going to bid. So if you're going to bid $100,000, you have to have at least $20,000 in there. But the catch is this: if you make the bid and you end up winning, they only give you till the next day, till like noon, to pay the whole amount. So let's say you were bidding and you won a house for $100,000, you bid on it, and you had $20,000 in your bank account, not your bank account, but your bidding account. They will take that $20,000 bid that you placed and pull that money out, and by the next day, usually by noon, you have to pay the other $80,000. If you don't pay that $80,000 the next day, you forfeit the $20,000 that you bid. So the safest thing to do is actually have all the money that you plan on bidding and put it all into the account, you know, to your bidding account. Now, what's kind of sucky about the bidding account is this. Each county has their own bidding accounts. So you can't have like you can't have $100,000 and split it over 10 different accounts. I mean, you could, but then you put 10,000 in each account. You can't just have it in one spot. Each county is treated almost as if it was a separate entity from the bidding site. So in a way, it's kind of good because it limits how much money people will put down, you know. But in a way, it's bad because it means that once you put all your money for the county you're bidding at, you can't bid in another county because all your money's in that one county. You'd have to make another account in another county and then put in the money for bidding on that other county. So here are my warnings about it, okay? They will list the days for the auctions and list the properties that come up for a tax deed. Now this is different than a foreclosure. A foreclosure is where people can't pay the bank anymore. Tax deed is where they don't pay the taxes. And most of the time on the tax deed accounts, if it's an older house or something, people don't owe any money to the bank anymore. They just are old and have died or something, or just abandoned the property for some reason. So it's like free and clear, okay? And I think if it was owed by the bank, the auction has to at least generate what's owed, and then the bank would be paid as well as the county and stuff. So, you know, when it gets done, basically, you have a clear title, unless a family member comes later and tries to dispute it, you know. But if they take the money from the sale, then, you know, I don't think they can dispute it. But they only have a certain amount of time to do that. I don't really get into the technicalities of it, but once you've signed up for the bidding auction, you know, at the county site, and you have made your deposit and stuff, you're ready to bid. So there's a calendar on the website that you click on, and it shows you a listing of all the available properties. And some of them are just empty lots. Some of them are like businesses, like big complex buildings and stuff sometimes, but they owe money, you know. And they've been abandoned, like the company went under, or the organization, you know, like maybe some Columbus Club or whatever, some kind of group, you know, that had the building. They stopped making payments, stopped making tax payments. So most of the buildings you're going to bid on are in kind of poor shape because they've been abandoned for at least 4 to 6 years, at least. So like my house was kind of in very bad shape. But occasionally you get some that are in very good shape. Like my big advice is once you get the list, which is online, when you click on it, it has a link of the address, you know, for the GPS location. But a lot of times if it's a house or something, it has an actual address. So you click on it and you can go look at it. The problem is this. The county can kind of be scammy about this because they say, well, this isn't our website, we're sending you to a third party, which they send you to like Zillow or some other party. And then you go to look over there, or even the property appraiser's office, and you go to look at their website with the pictures and the link on all the information on the house and everything, and they'll have a picture, but it might be from like 10, 20 years ago. And the reason that's important is this. What I found with the county is that half the properties that were listed, they have a picture of a house that looks all nice, but when you go there might not even be a house there anymore. Like the place is burned down. So the picture on the website, which the county says isn't theirs, but they link it, has a picture of a nice house. When you show up, there's nothing but a burnt out shell there, or a hole, or an empty field. So my biggest advice if you're trying to do this stuff is don't trust those pictures. You got to go look physically. You got to physically go to the location and look at the place. And then the second thing you need to be warned is this. A lot of times the bidding looks like it starts really low because what you're bidding on is what's owed on the property taxes and stuff, which is usually $2,000 to $6,000. But my experience with what I've seen, you aren't going to get a property for that price, at least not anymore. Maybe in the old days, before everybody started bidding on it. Nowadays, I think there's a lot of investors, and sometimes they bid sight unseen, and they drive the prices up. And what's crazy about it is sometimes they drive the prices up more. Actually, so far, almost every single time I've seen, they drive the price up more than what the property is appraised at, by the county. So they drive it up to basically almost retail price of what you would pay through a real estate agent, which kind of sucks. Unless you get a house somewhere that nobody wants, okay? So even though they list it for like $6,000, it might end up costing you as much as like $40,000 to $50,000 to $60,000. If the value of the place was about 70, anywhere from 40 to 90,000. So sometimes you get the property at the price of the value, but usually it goes over what they listed. So if the property is valued at 90,000, you could end up having to spend 110,000 to get it. You're like, well, that's no good. Why would you pay 110,000 for a property that's only valued by the county appraised at 90,000, and you're paying $20,000 more? Well, the investors know that right now the real estate market is like really hot. So it's like a seller's market. There aren't enough houses available. People are wanting to buy the houses, so they're driving the prices up. So that house, even though the county is appraising it at 90,000, on the street value of it, it might be 200,000. Yeah, believe it or not. On the website, it'll say it's worth 100,000, but if you go to buy that house, you're going to pay anywhere from 180 to 200,000 for that same house. So somebody who knows that, they're willing to bid $110,000, a flipper, a house flipper. So they will buy it for $110,000, not do anything to it other than collect all the stuff, maybe clean it out, Like one of the houses I went to look at had a Mercedes sports car there and a truck. It was valued by the county at $115,000. The taxes owed on it was, I think, $7,000. So that was one of the first bids I did. I thought, I was like, dang, I could pick up a $115,000 house. In addition, you get everything that's in the house and at the house, including the Mercedes and the truck and anything else that's there. I was like, wow, you can pick all that up for like $6,000, $7,000, but that's not how it works. It started at $6,000, $7,000, but then all the people were bidding on it, and they drove the price of that house all the way up to $115,000. It was valued at like $109,000 by the tax appraiser's office, but it sold for $115,000. And then I think the houses in that area are currently selling for about $160,000 to $190,000. So, I don't know if people were buying it to invest in it, to resell it, a house flipper, or if they were buying it to live in it. But whoever won that auction, because obviously I couldn't afford $120,000. I was nowhere near competing with them. They won the house and the Mercedes and everything else that was at the house. And the reason I didn't know there was a Mercedes and a truck that was there was I went there to look at it physically. I went over to the house and looked at what I could see, hopped the fence and went to look at it. So I went to a lot of different houses to look at them, just to make sure they were there. And that's when I saw the houses. Some of them I went to, there was nothing but a burnt down house with a burnt down toilet bowl. But in the picture, it looked really nice. It was a nice little house with a nice garden and all this other stuff. But then when you go there, it's like all trashed, and there's a shell of it that's all burnt. It like was burnt down in a fire, and there's nothing but a toilet there, toilet bowl half burnt. So, and people were bidding on it. But then I see that same house go back up for auction. I don't know if after people won, they went to look at it, or if the county may be scamming, like the website. I don't know if they're having a bot or a human bidding against people driving the price up to make the place sell for high instead of letting it go for the $6,000. I almost want to say I suspect that they may be doing that, but I don't have any proof that they might be jacking the prices up by bidding it up until a certain point. Now, in the case of the house I got, I think the people are dead. It was like an elderly couple from what I could, research. And they couldn't track them down. So that means even though the money, I bid more than what was owed on the taxes, I called the county and said, so what happens to the excess money? They said, well, it goes and it sits in a place. They try to give it to the family. If they don't get it, the state takes it. I'm like, well, is there any way you can claim it? She's like, you can try, but she's never heard of anyone getting it. You have to have a lien on it that was filed before the auction even started. So chances are I can't get my money back. The place I bought wasn't worth what I bid on it. So, I unless I can get it all fixed up and end up reselling it for retail, or close to retail, then I might get my money back and then a little bit extra. But for the most part, I got kind of screwed because I bought the place a little bit on the higher, way more than it was valued. But at this point, what can you do? It's mine. I'm gonna try to fix it and live in it and maybe sell it later if I decide, I don't want to stay there. So that's where we're at with that. So I hope that you found this information useful. It's not as complicated as it seems. The main thing you need to make sure is that you have plenty of money, and to kind of get a rough idea of how much you need, when you go to that website, like realauction.com or whatever, taxdeed.com, I think is one of theirs, but it's all powered by realauctions.com. When you go to their website, look, and you go through it through the county side of it. The county has their own special URL for whichever county you're trying to bid in. Look at the past auction, like the one from the month before, maybe the past month or two before, and see what the property sold for. That will tell you an idea. So a property might be listed at owing $6,000 in taxes, and the value on it might be worth $40,000, but you might see that it sold for about $50,000 or $60,000. And if that's the case, then that should tell you, or that will tell you, that if you hope to win a property that's worth about $40,000, appraised at $40,000 by the county, you're going to need about $50,000 or $60,000 to win. They won't let you have it for the $4,000 or $6,000 owed in taxes. A lot of people, when they first see it, they think you can get it, just like I did. I thought I could get it for $6,000. That's not how it works. I mean, that's how it could work, but I don't know. Like I said, I don't know if they put someone into the rig it to make the price go up, or if it's just investors doing it, or just people who don't know. I think a lot of the people driving the prices up are the investors who don't even look at the property. They look at it on paper, or they look at the picture, but they don't even physically go there and see that the place is burnt down, or that, it's full of dog poo. So that is my biggest warning. Make sure you physically see the place before you bid. Look to make sure what the going rate is for the bidding in that area for a similar property, one that's valued about the same price as yours, same area. And that's what you can expect to pay. And look at their winning bids, and if you hope to beat them, you got to bid higher than that. Now, the way the bids go, you can set it on an automatic bidding, and it'll automatically bid and keep bidding up to the maximum that you bid. So the winning bid is the one that was willing to go up the highest. That doesn't mean that was their maximum bid. So they might have won a place for $50,000, but they had set the auto bidder to $60,000. But nobody else went above $50,000, so they won it at $50,000. But that means to beat it, you're going to need to bid more than $50,000. And you say, well, I'll bid $51. Yeah, but they could have set it at $60 for their bidding. If they set it at $60, they'll still beat you if you only set yours at $51. So if you really want to win, you got to set the maximum you're willing to put into it, and you will win. But like I said, don't do what I did. I mean, I knew it was bad, but I didn't know it was that bad, because I couldn't get inside it. I thought it was intact inside. I didn't know it was going to be all that I was going to have to gut it and rebuild the whole inside and rewire, get the water pipe and everything working. So I didn't know all that. Had I known that, I wouldn't have bid on this one property. So do your research, do your due diligence. I might do this again if I get some money, try to get a better place. It just depends on whether or not I have enough money. Right now, all the money's going into repairing the place that I have right now. but it could be a good opportunity to make money. I saw somebody one of the people who, I think they were investors, flippers, they were bidding against me on the house that I lost. I lost to them by $200. You know, their bid was $200 higher than mine, and it won because I ran out of money. I couldn't bid any higher. And they bought the place and then turned around and tried to sell it. I don't know if it's sold already or under contract right now for, I think, about $20,000-$30,000 more than they won it for. So they won the place, and then within 1 month they had it up for sale for twice the price of what they bid. You know, so investors are doing that. They're basically buying rundown buildings that they're not even looking at. Then they're winning it. Then they're putting it up for sale. I think they go look at it and clean it and stuff and get anything valuable out of there. Then they put it up for sale at like twice what they paid for it. Double their money within 3 to 6 months. I think that's what they're doing. Now that's assuming they can sell it for that price. You know, so, but they're basically you're getting a property at probably a discount of 60%. Between 30 to 60% lower than current real estate prices if you were buying it, you know, through traditional methods. But you could be getting a property that's run down. I did see a house now this was crazy, okay? This was a nice house. It was on the beach side. The house was valued at $340,000. So the house was valued at $340,000. Taxes owed on it were $40,000. I was like, wow, if you could get it for $40,000, you can get a $350,000 house, $340,000 house. You know, that wouldn't be bad. But I was watching that auction, and that house sold for I think it was like $540,000 or $560,000. So it sold for $200,000 more than what it was valued at. Because people really wanted it. It was in really good shape. It was in a nice neighborhood on the beach. You know, not on the beach, but near the beach. And that's what happened. So I want to thank you all for joining me. I hope you found this information useful. If you do, please give the video a thumbs up, like, share, and subscribe. So until next time, everyone, take care. God bless you all. Please stay safe. Bye-bye now.